Microphone check and screen share check. Very awesome. Okay. All right. Good evening. Tortoise Capital Nightly Strategy Podcast for August 8th, 2022. Hey, we had a very good day today at the college with Angus Fletcher of Ohio State. Our creativity guru came with a friend, his research partner from Stanford, Mike Benavista, who are co-authors of the second most downloaded paper in the annals of the New York Journal of Science ever on the subject of creativity, and they're here to help us kick off our research program into creativity for Army officers. This is the same one that we're pretty sure already works based on what we've been doing with the Creativity 202 course. My work with students informally and then with all our soccer players. So this is going by the numbers to persuade the Army that we got something important here. Good news is you already have access to that material from us. All right, so let's look at the market health check first. So today it opened higher at a new 30-day high, but then could not hold and then closed essentially just a fraction below where it closed Friday. So there was not much difference in the markets. It's holding strong at about 413. It held above the one-day low and the five-day low. It was not an especially large range day, so that's all good. We're still contending with these two support levels of the, peak of the RL10 and the dragon over in here. So we're still trying to get out of this mud right here and trying to get rolling. Because today did not fail below that level, I still consider that to be, a reasonable day. There was buying pressure based on the gap up, and the selling pressure really did not get out of control. So I take this as a positive sign. I'm looking at the one-day low, two-day low, spine of the dragon, five-day low, skin of the dragon. PSAR is kind of really the crucial. But in my view, if you're already holding any of this move, letting it come back to here feels a little too relaxed to me. Like I don't want to give it back all the way to here. My view is the two-day low and not more than the three-day low. Like I want to lock in that piece and call it mine. And because I know how to re-enter. So like if it comes down here and starts to resume, I know how to re-enter. But I don't want to pay for that real estate twice. So for me, the two-day low or the three-day low is, I think, where you want to be on your swing trade. A reminder, we're still in bearish conditions, and I want to respect that reality. Those bears can wake up pretty fast. Still, not a bad day today. On the 30-minute chart, let's zoom in on that somewhat, a little more. You can see what that looks like in here. This was that gap up. From here to there, it ran up to make a new 30-day high, but then it couldn't hold. This was the indication that move might not have legs, was when it crosses its own baby dragon right in here inside this bar. And to me, when that resistance level can't hold, it can't become support, that's the indication that maybe today's not the day. That would have been a reasonable way to exit any of the trades that were in here trying to work. that would have protected you against all of this and a relatively weak close in terms of the daily trade. That's the daily trade. To me, it's important that we stayed above like 411, belly of the dragon. So there, I don't see that again that there's much room for wiggle room in here. If that support level collapses, this one is not far behind, and then the 5-day low is not much support at all. That was just a couple long tails. So this, in reality, right here, that's the statistical support level that we're working with, is 409.5. Like, this is just vapor right here. That's not real support. That's like a thin piece of paper covering up a hole in the ground, or a veneer. There's no structure. This is the last piece of structure that we have. Those two double bottoms. And this was a piece of structure here that was providing support that helped it move up, right? So structure, and structure. So those are holding. Those are load-bearing members. This is a load-bearing member, so there's not much wiggle room. If this doesn't get you out, you can't last any longer than this, in my view, because that's the last load-bearing member. This is just vapor right here. Similarly, if it breaks above like 416.5, that's the trigger to go higher. Like, this is just vapor right here. That's the structural limit. So that makes this our trading range for tomorrow. And as you can see, I'm not giving this much room at all. Let me know if you found that helpful in the chat. So that 30-minute view is kind of nice because it's 10 times larger than the 3-minute look that I am typically looking at. All right, let's look at our indexes now. So the S&P was weak today at minus 0.12. Here's the cut line between gainers and losers. The Qs were the weakest, not good, minus 0.32. Diamonds and emerging markets were slightly better, 0.12 and 0.14. The Russell was a little more persuasive at 1.06. Treasuries had a nice day at 1.61, back up to 118.35. Tesla had not a bad day at 0.78 on a day when the market and tech was bad. Tesla was pretty good. It's still working with a $5 R10, and it closed at 870. It has to get above 915 to really break out. So that means that at one point today, Tesla was at 915, 0.60, and then couldn't hold that and sold off all the way to close at 871. So that's still almost a $45. That's almost a range stat move right in there. That's how far this fell off today. So that, even though it was 0.78, that means it had a nice gap up. It really couldn't hold that as it sold off almost a full range stat. So even though that's in the green, I am worriedly non-committal on Tesla. That was not a persuasive up move today in Tesla. All right, let's take a look at the underperforming sectors here. And targets, not that many. S&P was here, minus 0.12. You had the FANGs and tech were the only sectors that were down, 0.55 and 0.85. Then you had weakness in Squarespace, 2.5, Alcoa and Microsoft, 1.7, 0.9. Apple was weak at 0.29. So there's some bellwethers in there that were not good. We don't want to see, that's not helpful. To the upside, let's see what we got here. So the S&P way down here at the bottom of the stack, not helpful. Finance and staples marginally better. The first big stack of improvements here. Oil exploration, S&P discretionary, energy, food closed above 20. These get some legs. Materials, Aussie, real estate, marijuana, ARC Genomics up to 0.94%. Lithium and blended commodities 1.2, 1.3. The two lumbers, wood and cut at 1.5. ARC Innovation 1.46. That's good news for the ARC. This next cluster between 1.6 and 2.6 is clean energy, wheat and precious, biotech, commercial real estate, blockchain, Mexico, VXX. That's people buying portfolio insurance on today's failure to follow through. And then finally, global future of finance, oil, Brazil, Bitcoin, blended large cap crypto between 2.7 and 4.4. Ethereum, a very strong day at 8%. Individual companies, Rivian 6.7, Coinbase another sleigh ride today, 5%. Robinhood 2.69. So there's still some Bitcoin new or true believers at work now. U.S. Steel and the metals 1.6, Devon Energy and the energy 1.5, CLF 1.4. So those are the two metals that are really working right now, U.S. Steel and CLF. That should be on your radar. And then finally PayPal at 1%. Take a look at market health or reports now, I should say. All right, sniper trade of the day today was in the Russell. So that of the U.S. indexes, that had the biggest gap. Here was the opening range 5. I was very tempted here to follow through on the gap because it moved a risk box, that R10 box off the bottom in that first 5 minutes, and that's like 50 cents. But I decided to stay with the the OR3. Excuse me, I was on threes. Sorry. So the opening range 3 was in here, and I was tempted here. When the opening bar closed and then continued to resume, I would then brought the next breakout, standard risk box. This was a tempting moment, and then just standard exit. So that's 1 unit of reward, 1 unit of risk. So we're about +1. It gives me a COT of 2 here. So I play the breakout. It does nothing, and I respect the PSAR exit here. So that's about a -0.3. So we're about +0.7 net. The market was showing weakness across the board. The S&P was already selling off to new lows while this was stalling. So I was already in that. So there's your standard risk box. There's the PSAR flip. I was respecting the PSAR all the way down. But as we got into this was such a nice acceleration. I just took like the 1, 2, 3, and that's about 2. That's 1 unit of risk. That's 1, 2. So that gets us to about 2.7 for the day on the Russell, and was content with that around lunch, and shifted my focus to other things. So sniper trade of the day on the Russell. We saw the 30-minute already. Excuse me. All right, so we are in bearish quiet. So this is still slightly negative, but it does offer kind of a stealthy way. You know, we've gone from bullish volatile to normal to quiet, and that's a stealthy way to get into sideways quiet, which is favorable, and up into bearish quiet, which is favorable. If we can just grind out a couple more percent, we'll be up into sideways quiet, and then that's a favorable area. Today's weakness didn't really undermine this much. We're still torn here between right around the 50-yard line on the 90 and the 270, but the 10 and the 30 remain strong. But we did have a little weakness, if we're telling the truth today. Okay. Volatility stabilizing here. Not really getting wildly volatile to the downside, but it's kind of grinding the upside, and that's what you would expect to see. The Russell and Latin America both flashing some warnings about dead cat bounces. So again, those would be the first two places that I look to try to get short, simply because of how far up they've come off of their bottom. That makes them prime candidates for shorts. Min pains, IBM, Diamonds, 3M, Travelers, Home Depot. Max pains, Intel, I should have been on them today. ExxonMobil, Tesla, Cat, and Chevron. So energy continues to be a roller coaster. Dow Tactical 30, or Dow 30 Tactical, I should say. Handful of dojis, handful of auto framers. Intel looks the most interesting to me at 5-1. Chevron a close second at also 5-1. There was a positive breakout in Home Depot, the only one, so that deserves your attention. It's one of the largest components of XLY, which is consumer discretionary. So I would watch both of those and to be ready tomorrow. Even with Tesla's weakness, it was still one of the percent winners today at 1.2 far. Still has room to go up to get past 900, though. I mean, there's room for the Tesla's upside. I think that's a good thing. In the ETFs, a handful of warnings being flashed. Only a couple, 3 auto framers. That's going to be oil, which had a very good day today. Energy, which had a reasonable day. And then oil exploration, which had a good day. So metals and mining had a breakout. Silver had a breakout. The big breakout, though, was in clean energy, which was up 2% today, and then had a breakout on the 10-day, 1-month, and 3-month time frame. So that's really showing some resiliency. And I just missed it today altogether, even though we talked about it this weekend. Just didn't eat my own cooking today. Latin America had a very strong breakout, as did Brazil. So those both look like potentials. If we see the S&P going down, but Brazil and Latin America going up, that's a sign that money is rotating out of the overheated U.S. and into a laggard, which has been this region, and I would watch for that divergence tomorrow. Auto framer, just a handful today. ExxonMobil, Intel, Chevron, and Walmart, Energy, and Pfizer. That's a murderer's row of good opportunities at 3.5-1. I really like that. And I like the fact that oil and oil exploration are both on auto framers as well. That means that they have sold off enough, and even though they had a nice day up today, there's still a couple more legs up before it gets back to the previous fair value. So this auto framer is finding exactly those kinds of 2-to-1 reward to risk ratios, in this case almost 3-to-1. So I like the fact oil and oil exploration, and that makes Chevron and ExxonMobil even more interesting, because the logic chain would be is if you saw strength in oil but XLE was better, you can go the route of either Chevron and ExxonMobil, or go the route of XOP or PBW, the broader ETFs for oil exploration or clean energy. So that's the logic chain that gets you going. And this can all be going up, even though the S&P is going down, because the energy sector, much like finance, it's possible for that to be out of phase with the directionality of the S&P. That would not be surprising. A handful of daily squeezes. The market was not particularly volatile today, so look what you got right there. The top 3 squeezes: Chevron, oil exploration, and ExxonMobil, and then energy's in that top 10. That's a sector that did very well today and is not red hot, and so that means it can have more strength in an orderly fashion. So let's keep our eye on energy, especially tomorrow, and that means also Devon Energy. Looking to the to the sniper headquarters for targets. Only a couple Godzillas, but I like them both. Newmont Mining and Intel, both are, and especially Intel is extremely quiet, in spite of being so oversold, and yet it's very, very quiet. Was that a case of exhaustion selling and now just neglect? Why hasn't it failed further? Is that consolidation here, and everybody who's going to sell was going to sell? That's the argument for Godzilla to the upside. But at the first tipping point and the signs of this failing, Intel and Newmont Mining both are ready for the downside. So that makes a quiet little sleeping Godzilla. Do you really want to wake him up? I do, and I want to follow him wherever he goes, trading in the path of his destruction. So let price lead the way. No Godzillas in the tactical symbol set. Lots of fireworks here. Or popcorns, I should say. That's where you had really strong moves on the 150-day and the 30-day, and stabilizing on the 10-day. All near the top of its 10-day range, too. And the volatilities are very quiet. So that's all popcorn. That's like popcorn that's been in the microwave for 40 seconds, and it's ready to start popping at 45 seconds, and when it pops for 45 more seconds out to 90. So there was a strong move that got it into this, and now it's stabilized and quiet. Is it got another leg up, or does it all collapse back down to the bottom? That's the big question. And these have all been so strong that there's some latent buying on dip possibilities and second legs up, and it just means it hasn't started moving yet because the volatility is so low. I love that setup. The fence sitters, also characterized by a lot of quietude. So these are ones that are between the 0 and the 100 on their look-back periods, the long-term look-back periods, and they are right in this cluster in the middle between 40 and 60. So what that means is if it breaks out, it's got a strong move to the upside or the downside available once it starts to move. And they're all very, very quiet, just stabilizing. So it doesn't take much to get some enthusiasm or to begin pain and suffering. And then you just follow the momentum in either direction. And you have favorable reward to risk ratios because the compression has been there, and a long distance to move to just to get to the channel highs and lows. So this is a very special form of sideways quiet channel. Looking at the most quiets, really no distinguishing divergences in here. In the most volatile, on the 5-day, there's quite a few that are extraordinarily quiet, so that's a divergence. And then the follow-through would be ones where both the 5-day and the 1-day has very large. Well, those are things that are on the move time now. These other ones are just waiting. What's it going to take to trigger those to move? I don't know. But the fact that they are temporarily 1-day not volatile when they have been extraordinarily volatile on the 5 days makes you wonder, was it a big strong move up and terminated in a doji, ready to go or ready to fail? That's a compound critical state, just waiting for a big move. That's how we interpret that. You've seen the auto framer and the Four Seasons is still mostly summer. These are the sniper stats for the tactical symbol set. Again, there's no Godzillas in here, but Coinbase continues to just stun and amaze. Robinhood has had large 5-day, but small 1-day. And Biotech and Devon Energy both had big moves today, as did Squarespace and Exxon, or XOP, which is the oil exploration. Marijuana starting to move after a period of quiet, and so did Alcoa started to move, this case to the downside. So that's how I look for divergences from the norm. The norm is very quiet and not much follow through. These divergences here are things that already started to move today, and I'm looking for more follow through tomorrow. Check or hold. All right. Ethereum and Home Depot have the most strength. Home Depot looking actually really good right here. Apple pretty good on the long term, although it did give back a little bit today. But Home Depot looks to me to be the interesting one. XLI Industrials sneaking in on us here with some strength across the board. Healthcare had a little bit of recovery today after the temporary weakness. Big moves in real estate and materials and the conservative diamonds. Those are not bad on the 2-day. This is a shift away from tech. Tech, whether it's the Qs with a 37 weakness, XLK 35 weakness. Not much tech follow through today, and this is what, again, from a distance, that's what that looks like at the end of a nice run that is consolidated. This was the first day in 10 where they closed lower than the opening, and that's why I'm really cautious about 410. 410 to me, that 2-day low, I'm not sticking around longer than that. This is a natural place for it to roll over. And the slope of the 30 has been so strong that a rollover is not unusual. And if you see it starting to roll over like that in a bear, how fast do you remember that it's a bear market and want to preserve your gains and start accelerate the selling? Especially when that slope of the 30 period is up around Z+2. This is already up into nosebleed territory those last 30 days. So, word to the wise. Respect your stops in a bear. All right, that's everything from the daily I wanted to look at. Let's look at some sniper trades today. You already saw this one in the Russell, just as a quick review. I was tempted to go early, but I waited for the 3-minute opening range to break. Standard risk. Standard exit. I like to get paid early for 1R. Caught a 2 re-entry. Quick scratch. Stop and reverse as the market was failing broadly for a couple R's, so bringing about 2.5 home. Next one. This is Coinbase. This is another one of those that I thought about the, the opening was here, sold off quick, and then started zooming back up. I thought hard about that with the standard risk. It would have paid off in the first bar already to here, but I didn't pull the trigger. I don't try to get everything committed in that first bar. What I did on this one, though, was when I saw the second 3-minute bar was an inside bar, I set that one up as like the opening range 3+1, and I saw the higher low, and I saw it break out here. I decided I wanted it here because it was another risk box. And I felt like I didn't want to wait until this breakout. I wanted to make that mine. So I just held my nose, took the position here, standard risk box. It rolled up. And then couldn't hold, and I wanted to just capture half an R. So we captured half. Caught a 2 re-entry. It pushed the previous high. Got to the peak of the RL10. And I took the 1, 2, 3 exit, which was just enough to scratch. That's been so volatile to the upside, I was willing to give back all but except that little sliver. I thought hard about that short. But the market hadn't started to collapse yet. And I was respecting this gap up. And what was a pretty strong 2-leg move up, so I didn't take that one. But when this broke, kind of that 2-bar, 3-bar low, I went ahead and took that one. So it was a little late on the short entry. Was respecting the PSAR. Got lucky. The market was in deep sell-off by that point, so this is one of those respect the PSAR. 1 unit of risk. 1, 2, 3. If this gets you out, then you're allowed to get back in on the collapse of this structure, either right here or right here, and then you're back in, and the PSAR is still your reliable guide. This was the RL10 wiggle that I thought about but didn't take. Here's another RL10 wiggle I thought about and didn't take. But I was pretty happy with that capture. Coinbase. And really, there's no reason to expect it to get further down than a return to Friday's close. And it pretty much got there. So I felt like I'd get the fat part of that trade. This is Brazil. Big gap up. Big gap up. opening range 3. I buy it, and that's the risk box. The R10 is like 8 cents. I used 10 cents. I'm not offended if you use 20 cents. I used 10 and just rounded it off. Captured a half an hour. Respect the PSAR flip. Here's your R10 crossing the baby dragon. Here's that thing rolling over, crossing through the dragon. That's the RLXD. That's your PSAR flip. That's right by the numbers. A return to close the gap. Now, if it breaks below the low of the day, that's really a signal for the rest of the world that there's a chance that it might recover back to Friday's close. And you might also, that's such a large gap that you might just say, let me take a 50% retracement and say from here to here, just split that in half and say that would be a nice leg for this thing to fail down to here. Would be nice given a risk box of that size. Check or hold. Nothing, half an hour. Were you expecting it to go down here because I drew the box down there? Be careful how you mark up your charts when you're saying these are my profit targets and I expect it to get here. Or you got to remember to say, I wouldn't be surprised. Wouldn't be surprised if it were to get there, which is different than saying that is my profit target. That has a little more sense of confidence and affirmation and belief. This one is just saying, hey, I'm a monkey. I get surprised all the time. It wouldn't surprise me if this thing fell that far or fell halfway. It could happen. Which is different than saying, I have an expectation that it's going to meet those two price levels and might cause you to stick around too late. Watch your self-talk. Watch the way you're using your markings on a chart to shape your beliefs, which puts an emotional commitment into the direction of the trade, and who knows? That's just wiggles on a screen. Market can't see those. So this captures a little taste, and then this is your PSAR flip. Is it going to go to here? I don't know. But I would certainly be short not later than the RL10, even at the base of the dragon. That's your stop and reverse there. For the same reason that this could work, this could work. If this fails, that could work. Where can this one go to the upside? Certainly to the high of the day and to the RL10. The RL10 prints way up here. Part of that is because of the size of the gap. And so that's an implied peak fair value. It has to get above this to be very interesting, which is sort of the residual latent good feelings about the gap. So let's see which way this thing's going to go. Capture a sliver. So again, this is one of those, I gave it 10 bars. I mean, dude, you had 10 bars to do something. Failure to follow through. FT. Failure to follow through is information. It's failing right where it failed before. So I get paid a little bit for sticking around. And that's a stop and reverse because it hit the PSAR. So respect the PSAR. Now, if this fails below the RL10 and this PSAR level, then this is big time failing. Again, all the way back to here. It's still the same frame. So that makes this the tactical frame right here. Meaning that it's kind of it's just noisy and tactical. All I'm trying to do, if price gets down in here, is get my risk out of this to no lose plus dinner for two. It doesn't start becoming directional and decisive until it gets below this structure. Check or hold. It's like an anchor. Somebody put a peg in to protect them in their mountain climbing. And if that fails, look out below. I thought hard about capturing that little piece. Because it was finding support kind of where it had found support. And that would have actually been the biggest move of the day so far compared to these two non-productive things. So I was very tempted to take that there, but I was watching the S&P fail, and I was thinking, man, can a guy catch a break here? Apparently not. So this was like trading for hors d'oeuvres and appetizers today. Never really got the move in the morning session. Having a big gap and then nothing, that's the most surprising thing of all. So the idea is that if it had closed, if it closes here and then has a nice big gap up, you're expecting either a great big move up or a great big move down. The most surprising one is something that just monkeys around and stays at this new price range in this tight. You're expecting a big breakout after a big gap. You don't know which direction. So that was the unusual thing about Brazil today. There was not much follow through until later in the afternoon when I was already out of it. Okay. All right, so this is oil, USO. There was a gap up, a range expansion, standard risk. Energy has sold off the most of the S&P sectors, and oil also pretty bad. So this feels good already. There's like a little R10 wiggle. Feels pretty good. Respect the PSAR. All that good feeling. This felt like leg one, pause, leg two, pause, and nothing collapsed. So 1 unit of risk, 1 unit of reward, +1. We'll take it. Caught a 2. A low, a higher low, crosses the dragon, hits the PSAR, standard risk at the bottom, that works out right to the bottom of the RL10. It gets interesting when it gets above this structure. So this is now becoming interesting. Do you have any juice? As soon as it breaks that structure at the emerging dragon, that's why I like to have my stop up in here. That's the argument for making that trade here. That as soon as the next generation of traders that are waiting for the confirmation of the breakout to start buying it, if their enthusiasm pushes this higher, you're not chasing it. What you're doing is getting your risk, which was this box, you're getting that risk out, and you're locking in this chunk of change right here. And you decide, do you want to be here and lock in a little more? That's a good problem to have. That's the argument for the SSC compared to the emerging dragon breakout. We had that discussion over the weekend on swing trades where guys were getting a little gun shy. There's an R10 wiggle, but it couldn't really hold any higher. Comes back, respect the PSAR. So again, we were at +1 here. This is 1 unit of risk. 1, 2, 2.5. So call it +3 with some spillage. Kata 2 hits the PSAR. Just hold your nose. Put it right back on. Let's go. Scratch, rats. Could have been short. I liked the strength in USO, and then all of the energy sector was strong, so I was not in a hurry to make that trade. I was ready for the Kata 2. Kata 2. Kata 2. This one scratched. This one held support. Try it one more time. Scratch, nothing. One more time, yay! One more little squeeze, but there was not much left. So we'll take a little piece on that one. I spent most of the afternoon trying to make oil work. And not so much. ARE, this is that Alexandria real estate, the healthcare real estate company that was a Godzilla so long ago and still trading nicely. Here's the opening range 3. Here's the breakout. There's the standard risk box. Looking for it to go. Scratch. Kata 2. Worth about a half. Was tempted on this one. This is not so liquid that the short, like it's very volatile both directions. So I have only been playing it to the long side, but I was sure tempted, just on the pattern basis, to get short there. Was tempted again on the R10 wiggle to the downside when the R10 rejected the dragon. It couldn't get through the PSAR. On another R10 wiggle, I was really tempted there. I was tempted here when it made a new low of the day. This temptation is leading to feelings of despair and regret, so forgive myself and just play the SSC. That's my trading plan. That's not working. And stuck around way too long on that one. That was me trying to believe that because I had missed the short, that therefore it must go long. That's the dumbest thing I ever thought of. And this was the trick here. I mean, those lower lows, when this rolled over and couldn't even get out of the box, I need to be out here. And instead, I took the 1 hour loss. It's stupid. So, being a monkey, what are you going to do? You're going to leave that for better monkeys than me. So, not good on ARE. Jacobs Engineering. So this is a new trader for me. This was a TC2000 alert. Basically, it was a Dragon Horns Z3 excursion, and then was starting to fail. So I was very interested in like this, or even that. Was tempted on the piecer, but I'd never traded this before. I wanted to see it break. And then I missed it. Stupid. Now it's getting sideways quiet channel and then a second chance for the breakout. And I didn't have the zero state. I had too much emotional baggage from missing that and missing that. I just couldn't. And then I said, why am I thinking so much on this? Dude, just get short, put your wrist box on it, and respect the PSAR. Is that so hard? Yeah. Some days. And that's why I respect the PSARs. Okay, fine. Do what you're supposed to do. Boring. 1, 2, 3. Caught a 2. I thought it hard about the SSC, but I wasn't really sure how this thing traded, so I wanted to see like the Kata 2, so I was willing to try that one. Take one of those, bring it over here and put it in for risk. Scratch. That was enough. Still, this one feels like International Paper felt a while back that that was a serious directional move on an S&P 500 industrial, and that's going to it's got a single stock ticker, so it's been around for a while. So J, that's on my continuation list for tomorrow. All right, so that was that. Let's take a look at the boys for trading here. Let me come back to this one. This is a quiz from Sonal on from Eurozone. Here's Les. PSAR pinch, or a Z3 pinch, breaks down, gets paid. Wanted to lock in one. We should be re-entering here. He does get the rollover and tries that. Quick exit, that's good. He didn't believe in it too much. A hair trigger slow on that, that's still pretty good. And here's your PSAR. Ladies and gentlemen of the jury, I submit we should trust the PSAR. I'm working on trusting the PSAR. So here's what I want you to do, Les, and if you're in the sound of my voice. Think of a person or an institution that you trust now. Why did you trust it? What led you to the belief that they were trustworthy? That's your persuader strategy. It may be that all you need to do is just give it a chance and trade it at 1/10 of the risk in terms of dollars at risk, and just give it a try and see how it feels, and you want to just desensitize. Is it because you don't trust the particular indicator, or simply the fact that it's something new? It's like jumping with a tandem parachutist, where you get an expert parachuter and you fasten to his rig and you jump together and he handles all the the technical pieces. It might be like that. What would it take? What does it take to get you to try this and trust the PSAR and explore current people you trust and why, and then things that you don't trust and why? And what's the importance to you of not trusting the PSAR? To not trust it is giving you some kind of positive feedback, whether it is a feeling of control or reduced risk, or there's an explanation for this. Say, well, I'm just studying it, so now I don't have to trust it. Yeah, that's a good trust technique, is to gather evidence. But do you have a specific experimental plan to study this for? How many times are you going to study it? Put that in writing and make it a contract with the PSAR. Say, I'm going to study it for 30 serious efforts, and I'm going to make a decision on the basis of that sample in order to proceed with a 1/10 of the normal position size to start testing it with skin in the game. But that's one of the ways that you can learn to trust, is by beginning to trust, or at least acknowledging what is it about the trust concept that is meaningful for you. And then, as always, trade it with low risk. Luke on the 5-minute Aussie gets paid today. Quick exit, great re-entry, 1, 2, 3 exit. I'd have been very tempted in here. This is a good short, good stop. Yeah, I think you could stop and reverse there, but I don't mind you waiting for the RL30 to start hooking up. And that's good work. Well-chosen moment to get out. Always a reminder that there's more coming, so you don't have to make each one the most important trade. There's always more trades coming. So that's good work at 1.7. Woj on the, so this is Devon. Yeah, that's the OR. I get, what are you on the threes? Yeah, OR3 breakout, and we let that come all the way back to take a 0.8, maybe where the PSAR broke before. But if that doesn't work right away, sooner rather than later, just get out. The short was slow to get in. Like when this collapses here, when that structure collapses, we can be short here, and then this is at least a scratch. There's your PSAR flip long. That's a good exit. This is your short either here or here at the PSAR, and that would get paid. This is your PSAR flip. Good Lord, does that get paid with an exit here. So that's self-inflicted today. So forgive yourself and let's go. This was legit. Okay, you stop trading that symbol. This is a Kata 2 right here. I'd have been taking that one and lost, and tried to short this to the VWAP and scratched. Tesla, OR3, great entry. He gets paid for a leg re-entry, gets paid for a snack. Quick exit. I would have tried maybe here, but that's still pretty good. I think I get out here like you did. When that VWAP breaks, And now you've got everything rolling over and you're getting lower lows. Right here, that's your collapsing dragon for the first one. This one is still rejecting the VWAP. Man, you got to crush that one. That was the range stat move off the high that we talked about earlier today. Still, +2. That's nice work. ETH WMB3, you can only get long on this one, which is good. Although you can trade the Ethereum. So, boy, that's just such a great Z3 pinch breakout. It gets long, nails it. I like this one as a continuation. You gave it room. It didn't work out. So, quick hit, and then a re-entry was sublime. Nice work. 3.2. And Ethereum remains in play. This is the, let's see, the 3-minute Aussie. Quick scratch, gets paid. We missed those two. Get back in the zero state, got paid. That's good. So there's Kata 2s all the way up on this rascal. I think my spider senses we should be doing better in here. But that's a great, that pennant, that flag, and then it breaks. That's a great one. So nice work today. Total for the day, 3.6. I'm liking it. All right, that's everything we got for today. Let me set up the quiz for Sonal. She asked for some feedback in the chat room. So this is some advanced trading. She's in the UK group. We talked about this one at the creativity. So she's looking to this is kind of standard work for Sonal. On her multi-time frame, she looks at weeklies, dailies, 2-hour, and 30 minutes, and is using that to get the lay of the land. Like, it's finding support here. This is ready to go. That's the dip. There's the PSAR flip. We should be crushing that on the daily. Here was a sideways quiet channel and PSAR flip. We might have gotten that one. Might have gotten that one. Her 30-minute, it failed. Didn't fail further. Can buy this breakout. So she made some money on the intraday in here. And now she's looking for ways to grow this. She's looking for ways to grow this to add to the swing position using intraday 5-minute pockets to work on the hybrid frog. So she's looking at hybrid trading and using the intraday strength. So her main idea here is that the window of opportunity on the weekly says there's still room for this thing to grow, and so can she start adding to positions intraday, which are bet. So she's got a swing trade from in here. Can she find ways on the intraday to continue to reinforce the run up and add turbo to this? I would say, yeah, you can. Maybe take twice the size of your swing trade. So your intraday size isn't blowing this out, but it's giving you a sense of larger position initially, putting 2 on and taking 2 off while still preserving the long run. I think that the 1-to-2 ratio of swing versus intraday allows you to ease into the strategy as you go. And what she's looking at to add to the 5-minute chart, look over in here. Here's where she's working on the 5s. And as long as there's this upward impulse, which is implied by the weekly and the daily. She's looking for ways to find those PSAR flips and add, and then kata twos to add, kata twos to add, and these are all just little pieces of you're adding to this. Like, this is a long distance cross country train that's just chugging along. It wants to get back up into here. It wants to get back up into here. And as long as that directionality intraday is working on the fives, you can make those low risk entries without believing too much in it. Like that, the fact that these are working intraday is not increasing your confidence in this, because the swing trade itself is confident enough. This is just extra icing for paying attention. So I would just say don't over enthuse about the intraday. Just treat it as a low risk opportunity to get an extra piece while you're in the trade anyway. So that would be the psychology that I use to start adopting that trade. But you guys can download this, her worksheet and her concept. This is what she's working on here, and that was the thing we talked about this weekend, was learning to construct story frames to isolate the moving pieces. The big sell-off, the kata 2, right? So here was the SSC that worked. This is where it failed to fail, and it started to resume, so you nail that. It stabilizes, you nail that. When it breaks out above this, you nail that. So all of those are little episodes in this ongoing saga of the intraday trade that's simply moving in the direction of the primary trend. So that's very believable. So some thoughts, Sonal, for you to consider. All right, that's everything we got for today. We'll get this published and posted, and we shall see you tomorrow.